Very good evening. Thank you for joining us here. You're watching Business at 9 and I'm Nivedna Prabhu. Let's put the top focus on the fact that US President Donald Trump has said he will announce new tariffs on pharmaceuticals and semiconductors within a week, starting with the small tariff on pharma that will sharply to 150% and eventually 250% in a year. He further said that he'd substantially raise tariffs on India within 24 hours, signaling pressure on nations exporting drugs to the US. He also said that India has not been a good trading partner. Now, all eyes are on how D Street will perform tomorrow. Before we analyze the experts, let's take a look at how the markets performed today.
Well, yes, after the up move, the good start to the week that we saw yesterday, we managed to pair all those gains because Nifty couldn't even manage to hold on to the 24,650 levels today. 24,649 is when Nifty shut shop. Nifty Bank also closed below the 55,500 mark, marking lower lows since the last three trading sessions. Mid cap and small caps also, were trading in the red. In fact, they also paired all the gains that we saw coming in yesterday. Nifty Auto was a top gainer that advanced for the second consecutive session, and that was led by Maruti. We also had Nifty Metals that advanced for the second consecutive session, that was led by Jindal Steel. Nifty Pharma was a top sectoral loser that was getting dragged down by Biocon, and FMCG also fell for the second consecutive session, dragged by Godrej Consumers. Besides that, we have stock-specific moves coming in. We had IndusInd Bank that was trading up 2% after the bank appointed Rajiv Anand as the MD and CEO. On the back of that, IndusInd Bank was doing well. We had BEML that was up 1% on the back of an order win. We had Aurobindo Pharma also that was trading up 1% or so on the back of good set of Q1 results. But on the losing side, we had Triveni Turbine that was down and out 7% in trade on the back of weak quarterly numbers that it reported. Besides that, we had Paytm that was down almost 1% on the back of a block deal that came in. And besides that, we also had other new age tech stocks that were reeling under pressure. Besides Paytm, we had PB Fintech, Zomato, Nike that were reeling under selling pressure. Reeling under selling pressure were also the OMC stocks like HPCL, BPCL, IOCL that were reeling under some selling pressure. So net, all the gains that we saw on the Monday session were paired in today's trading session.
All right, Ankita, thank you for joining us with that. But also joining me on the show is a special guest, Ajay Bagga, market expert. Mr. Bagga, thank you very much for taking the time out and joining us here. Of course, let me begin by how are you interpreting into what once again Donald Trump has said? And more importantly, Mr. Bagga, what are the key triggers you'll be watching overnight that could perhaps set the tone for D Street at the open?
Yeah, absolutely. Today in the interview with the Business Channel in the US, he said that he would be increasing the tariffs on India substantially in the next 24 hours. So we are expecting some announcement by end of the day in the US. It could be an executive order. And the talk has been of 100% secondary tariffs. I don't think 100% will make sense because anything above 50 basically shuts down the market itself. There are no margins like that for the exporters to bear. And then there will be substitution effects from other competitors from other geographies with lower tariffs. So let's wait and watch. That is an important trigger. Second will be the RBI MPC tomorrow. I think it's on balance whether they will cut rates or they will hold for now, wait and watch, and then go ahead in October. I would favor that either they bring down the risk weights so that credit revival happens in the economy. That is needed. They have put in the liquidity well. They have cut 100 basis points well, out of which 65 basis points have been transmitted. But monetary space is there with a low inflation regime, and on the wholesale side, a deflationary spiral coming in. So it's a good time to cut now because it will take 9 to 12 months to transmit into the economy. So these two will be the market movers. What Trump does by early morning our time, and second, what RBI comes out tomorrow in their MPC decision.
Absolutely, Mr. Bagga. Those are the key, trigger points that we'll be looking at as to how that pans out. But given the fact that, with Trump and all these announcements that keeps happening every couple of days, and this deadline as well that is looming, in a sense, when you're looking at the situation, does it increase the probability of volatility spikes in the next trading session? How are we looking at that aspect as well?
See, quite surprisingly, and it's not only India, globally also, the volatility has been very low. So India VIX is at 11 to 12 levels. So we are not really seeing a very high volatility, even though, say, FIs are hugely short at 91%. The markets were oversold. They recovered a bit yesterday. Again today, the put call ratios are showing very heavily under pressure markets, but the volatility is not high. So what that is really showing you is that sentiment is subdued. So you are expecting bad news. It has got factored into the market. So it's not that you are expecting something good or bad could happen, in which case you could see volatility moving around. So volatility is low, but the market fragility has increased. Markets are quite fragile, and this Trump tariff tomorrow morning could lead to, say, a 1%, 0.5% move, and then there will be dip buyers coming in. Good news is that the domestic investor is quite resilient and they have been putting in a lot of money. Some of that has been going into the primary market. Some of them that has been absorbing the QIP offers by promoters. So that much money has not come into the secondary markets, but still a fair chunk is coming in and dip buyers will come in. So we are not expecting this market to crash through very serious levels. Yes, 0.5%, 1% tomorrow move could be there on the back of the Trump tariffs.
Right. And Mr. Bagga, given the fact that, the FIIs that we're looking at, continuing their India allocations because of relative macro stability, given the fact that the way forward, this is a temporary positioning ahead of clarity, would you say that's perhaps the way to look at it?
Yeah, also earnings have to recover. So right from, when the national elections were announced through last September, we saw a 6-month fall in the earnings momentum, and we have not really caught up with that still. So we are expecting that the next quarter and the next quarter after that, post the festive season kicking in and hopefully urban consumption also recovering, we are expecting that year-on-year numbers will start looking good. Of course, with the Trump tariffs, the focus shifts back to domestics, and also domestic cyclicals should do well given the monetary stimulus that has come in. What would really catch the fancy of the markets if the government does some heavy lifting? They are doing well on the infra spending. So the public capex is good. That is helping. The 8th Finance Commission and the release of higher pensions, DAs will help on the margin. But what is needed is GST cuts. You cannot be celebrating 1.9 lakh crores GST month after month after month, because it's the same consuming class which is going on paying this, and it has reached a very high level now. So you need to cut the price of fuels, you need to cut GST, bring in some stimulus into the economy. I don't think it will happen, but that would be a wish list. And for the markets, definitely, if something can be done to lower the burden of taxation on investors, that would really unleash animal spirits. Again, very low probability. But if you ask me, GST cuts, something on the long-term capital gains to catch the imagination and bring in more investors. Now, 3 crore accounts are opened, they are ready. If we can attract them to invest more into the markets on a long-term basis, it's assured they will make money, and it will start a virtuous cycle, which has started, say, with the mutual fund SIPs. We are seeing the benefit. It will increase more if the government brings in some structural reforms, some tax cuts now.
Mr. Bagga, as you put that into perspective, taking a cue from what you said, that's perhaps a wish list if that's going to be met or not. But of course, like you said, only time's going to tell. But Mr. Bagga, let me also ask you this. Does the combination of this tariff threat and India's assertive trade messaging that we've seen, which has echoed at least in the past couple of days with the stance as well, making it very clear, change the way global funds price Indian risk?
Yeah, there has been talk about Indian valuations not being so attractive, and we have seen money going into Korea, going into Taiwan. We saw some money also going into Latin America, for example, at lower valuations. Korean market has been the best performer, nearly up 30% for the year. Different reasons behind that, beyond the syllabus for a 1 minute explanation. But what we have not seen is the re-rating yet. Though, Morgan had a report out earlier this week saying that a re-rating is imminent for India. I think that will come. That is bound to come, but we will have to deliver on the earnings front. So government has done very well in maintaining the fiscal discipline, but I think now the time is required to loosen the purse strings, and the government seems to favor institutional largesse, PLIs and infra spends and stuff like that, rather than putting direct money into people's pockets. I think if that 150 million strong consumption class can be given a tax break in terms of GST cuts in favored segments, and you bring in a consumption boost, that will boost your overall economy with a big multiplier. So the infrastructure multiplier is working, but now we need a consumption boost, and that can come with some kind of GST cuts on the margin, helping people keep some more money in their pockets, which they can spend.
Mr. Bagga, all in all, even when we're looking at this entire situation unfold, I just want to get your perspective on how, with India taking a firm stand against US and the EU trade posturing, how do you see this recalibrating global investor sentiment towards India? What is your purview on that?
See, global investors are smart enough. If you look at the EU deal, for example, what was the US paying? It was paying 1.5% tariffs to the EU, which they have brought down to 0%. Korea, what was US paying? 0.79% was the weighted average tariff on US goods, comes down to 0%. So all these talks of victories and great big deals, the investors are savvy enough to look through. EU, for example, Trump is talking about $750 billion of energy consumption by the EU, buying $750 billion worth of petrol, gas, LNG from the EU over 3 years. Right now, the EU consumption is 75 billion. How are you going to take that 75 to 250 billion? That's a very big question. And Trump can't hold them to it. Second, the 600 billion of investments immediately after signing, when the EU commissioner came back to Brussels, the question the countries were asking, we are not China, we don't have a state sovereign fund that we are going to put 600 billion into the US. So what did you sign? And very clearly they have come back and said, this is private companies who will invest. It will be up to them. US is saying we will make 90% of the profits that accrue. Today in the Business Channel interview, Trump said, I will decide where that 600 billion will go. That 600 billion does not exist. It will be companies. There are a lot of pharma companies, for example, Abbott and Roche and all have announced $50 billion plants in the US. So all of that will be accumulated and shown to Trump. See, 600 billion is coming over the next 3 years, but the profits are not going to the US government, as they're saying. Same with Korea, 350 billion. The Koreans are saying we don't have that money. It's going to come from our companies and we will nudge them to start operations in the US, but the government is not going to put 350 billion. So the investors are seeing beyond this. For India, it is an issue. 2% of GDP facing a threat, maybe 100% tomorrow, shutting down a lot of factories. There will be job losses in labor-intensive sectors. So the government will have to have a package ready quite fast as soon as tomorrow's announcement comes. We'll have to protect these sectors. At least the employment has to be protected till new markets are found or new uses are found for those factories. There will be some amount of issues, maybe a 0.3, 0.4% on the GDP, which is a big drag. So that's why I'm saying we have to have a fiscal stimulus measures ready to counteract this.
Right, Mr. Bagga. All right, that essentially we're going to know with time as to how that's going to pan out, Mr. Bagga. But thank you very much for joining us with your perspective. Always a pleasure to be in conversation with you. But for the moment, Mr. Bagga, we leave the conversation at that. In fact, as we continue to track more developments on Business at 9, let's shift our focus to the